Have you ever taken a trade and the trade comes and stops you out and then proceeds to go in the direction you initially wanted it to go? I'm willing to bet more than 90% of you guys have been through this exact situation, and don't worry because I was in the exact situation myself. In this video, I'm going to break down time frame alignment and how you can properly align your time frames so that you don't have to stop out of your trades before they go in the direction you want them to go. This is one of the concepts that nobody on here talks about. So I'm going to fully break time frame alignment down from the highest time frames to the lowest time frames. This is a video that is for day traders, scalpers, and swingers alike. So let's get right into it.
I can guarantee you that there is a lot of you guys that are out there that are taking trades on some PD arrays that you think are pretty good. And although you might have the right idea in the end, you still get stopped out on a trade and you can't really figure out why. So you'll see a 4-hour fair value gap, you'll drop down to a lower time frame, you'll spot out a market maker buy model, you'll enter, it'll stop you out, and then it will proceed to go in the direction that you wanted it to go in. So why does this happen? This is happening because you are not aligning your time frames properly. So if you have, for example, a 4-hour PD array, you need to be looking at the 15-minute for a market maker buy model, no less than that. So this video, I'm going to break down time frame alignment, how each and every single PD array on every single time frame aligns with its own specific time frame, and then we'll go into some chart examples as well. So let's get right into it. The first PD array that we're going to talk about here is the monthly PD array. The aligned time frame for the monthly is a daily market maker buy model. Meaning, if you have a monthly fair value gap, a monthly order block, whatever it might be, you're going to be looking at a daily time frame to see a change in state of delivery or a market maker buy model form on the daily time frame. Same thing with the weekly. You're looking at weekly PD arrays. It's going to be a 4-hour that you will be watching for a market maker buy model. Daily PD array lines up with a 1-hour, 4-hour with a 15, a 1-hour with a 5, and then a 15-minute with a 1-minute. Make sure you save this because this is going to be your framework for pretty much every single one of these trades that you're going to take. Now that we have this, let's break this down and go into an actual chart example where we can see this in action. So I'm going to go over a trade that I actually took in real time. This is on the 15-minute time frame. We have a 15-minute order block right here after the hourly already got a change in state of delivery. So the aligned time frame for a 15-minute is a 1-minute time frame. So once price pulls into this 15-minute order block, what you want to do is you want to go down to the 1-minute time frame and spot out a market maker sell model. Now, obviously, the basis of any sell model or buy model is going to be SMT, and you can clearly see that we do have SMT at these highs. This is the same order block on ES and on NQ. You can see NQ tags it and ES does not. So we know that we have SMT at these highs, which validates a move lower. Now that we know we have SMT, we can drop down to a 1-minute time frame and then find out if we can get a change in state of delivery. A change in state of delivery will be confirmed once we can get a close under this candle here. So that's what we want to see. We get that right there. So this would be an entry short, stop loss at a swing high, and you would take it at the nearest sell side liquidity level. This is the exact trade that I took, 3.3R. So now we can watch this thing play out. Very, very clean, almost no drawdown on this trade, or a 3.3R complete. Now, where the problem arises is that some of you guys might have actually taken this trade based off of this drop right here. But as you can see, we don't actually have a change in state of delivery until that next leg, which I pointed out for you guys. And you can see we don't actually get the full drop until we get a close under and form a change in state of delivery. It does a lot of up and down over here, but nothing is actually going on. This is another example right here, a trade that I also actually took. A lot of you guys might be looking at this and you're seeing 2 fair value gaps. So which one are we going to take? How do we select which fair value gap to take? Short answer is that we don't select the fair value gap. The fair value gap selects you. So if the setup forms at this first one, then that's what you take. If the setup forms at the second one, then that's the one you take. If the setup does not form at either, then obviously there is no trade. Now this is the hourly time frame, so we want to see a market maker buy model on the 5-minute time frame because that is the aligned time frame. So here we are on the 5-minute, both NQ and ES, and you can see that NQ forms a change in state of delivery right here, and so does ES. But the important thing to notice here is that NQ pulled into this candle, which is the order block, and ES did not, because that same candle on ES is this right here. So we now also have bullish SMT at the lows, therefore validating this move higher. So we have SMT, we have a change in state of delivery. This is not going to be a market maker buy model. You enter on this close up here, keep your stop loss at any swing low, and we want to target either the high or at least a 2R trade, which would put us right there. So there's 2R right there. Let's see how this works out. And before you know it, the trade is complete. So you can see we didn't anticipate which fair value gap we would get a bounce from. We just reacted to price getting a change in state of delivery out of a fair value gap. Let's go over another example. So this is a daily fair value gap we are looking at right here. The aligned time frame for the daily is the 1 hour. So we're going to drop down to a 1 hour and look for the same exact entry checklist. We want to see SMT, and then we also want to see a change in state of delivery. So this is ES and NQ side by side. You can see NQ on the left side pulls into the fair value gap, and ES is still significantly higher above this fair value gap. So we know that we have SMT here. We can drop down to a 1 hour and look for a change in state of delivery. You can see we don't actually get a change in state of delivery at any point here. Instead, we go put in a new low. We put in SMT at these lows, and then we get a change in state of delivery finally right here. So this would be your entry long, and you would have a stop loss at the lows and target any type of liquidity up here at the highs. So if you want, you can target this high up here, for example, make for a 2.7R trade, and let's see how it works out. A little bit choppy on this move, but nonetheless, the market maker buy model is complete and we hit the target that we had. So if you're somebody that is still struggling with finding entries inside of PDRAs or highs and lows, make sure that you are aligning your timeframes properly, because I can guarantee you that is the one thing that you are not doing properly.